Today we are going to talk about the Cypher pattern, timeframes. The Cypher pattern was designed as a day swing trading strategy. It was originally discovered on a 60-minute chart and has since been identified on virtually any time frame. Tactics. The tactics for the Cypher pattern are very similar to other well-known advanced patterns like the Gartley or butterfly. With the Cypher, we seek to identify 4 market moves and 3 major fib zones. The combination of these moves forms the 5 points X, A, B, C and D that fulfill the pattern. Rules of engagement. The Cypher pattern begins with a market movement impulse leg that establishes our X and A points. Once the X and A points have been printed, we then look for our criteria. Criteria 1. The market forms the B completion point by fulfilling at least a 38.2% retracement of the X to A leg. Note: the A to B move remains valid as long as there is at least a 38.2% retrace of X to A and there is not a candle close beyond the 61.8% retrace of X to A. Note: the B completion point candle wick can extend beyond the 61.8% retrace of X to A as long as the candle does not close beyond the 61.8% retrace. Criteria 2. If criteria 1 has been met, then look for criteria 2. The market forms the C completion point by fulfilling at least a 127.2% extension of the X to A leg. Note: the C point remains valid as long as there is at least a 127.2% extension of X to A and there is not a candle close beyond the 141.4% extension of X to A. Note: in a valid B to C move, there must be a candle close beyond the point A. Failure to achieve a candle close beyond the point A invalidates the move. This would be considered a double top or double bottom, which has no relevance to this pattern. Criteria 3. If criteria 1 and 2 has been met, then look for criteria 3. The market forms the D completion entry point by fulfilling a 78.6% retrace of the distance from X to C. Note: in a valid B to C move, the 78.6% retrace of X to C, D completion point, must exceed the distance of C to B. Trade management, entry, stops, and targets. Simple rules: entry, limit order placed at the D completion point, 78.6% of X to C. Stop placement, 10 pips of point X. You should adjust it to your own risk management strategy and always take a look at previous structure. Look left. Target 1. The 38.2% retrace of C to D leg. When attained, stops move to break even. Target 2. The 61.8% retrace of C to D leg. This is the Cypher pattern. Thanks for watching and don't forget to subscribe and hit that like button. Trade safe.